Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, 5 o'clock in New York. It is the 6th day of June 2012, and this is the daily report for gold and silver. Although trading well off of their highs last night in trading overseas, we do have the precious metals higher this morning, with gold currently trading up approximately $2.50, 1620, 1621 as you can see. The high 1642 and our low 1612. Silver showing an incredible move to the upside and still maintaining that move actually. 29.52, putting it up about 89 cents on the day. The low 28.70 and the high 30.01. We had the markets sharply higher, specifically gold in overnight trading in Europe last night. There was the belief that the ECB, the European Union Central Bank, is going to be adding some sort of a monetary policy to stimulate the economy over in the Eurozone. That took the market sharply higher. The first chart that I do want to take a look at today is going to be our daily chart. And in this daily chart, we do have a couple of technical studies that's why I wanted to kind of take a look at it, an overview, kind of step back for a little bit. And a couple of things that we're going to absolutely notice in this market. First thing that we'll take a look at is really our moving average convergence, divergence, or MACD. And you can see that we had these lines kind of wavering in here, but we actually did get our cross, and we got our cross to the upside. And that signaled, of course, our buy signal. If you kind of carry that line straight up, you'll see that that corresponds quite nicely with the market when it actually began to bottom and then move up. When we look at our relative strength index, we talked about that a little bit last week. We talked about this threshold line right here. And as you can see, once this market broke above that threshold line, that also matches the bottom of this market quite nicely. The third indicator that we received last week, and these are the things that prompted me to actually issue our buy signal from the long side, was the Henkinashi charts. And as you can see, we talked about this, I'll blow it up in a second, but what we really talked about in this particular chart here was the fact that we had these doji-like candles. Now, a doji is simply where the open and the close are about equal. That's really what it is. And you could see without a doubt, it's going to look like something like that. And when we actually go ahead and blow this chart up so that we get a really better idea and we can get a better sense for the market itself, what you're going to see is that not only did we get a single doji, but we got a cluster of them. We got a couple of small-bodied candles right in here. Now, what I find interesting is I talk about a set of indicators which work together in unison as having confluence or agreement. And I think we can quite easily see when we look at the Henkin, when we look at the MACD and the RSI, we certainly got that confluence. And then lastly, traders, the candlestick indicator that we saw was a simple 2-day pattern which began with this red candle right here. And this happened, of course, after the market had been trading sideways for quite some time. But you get this according to a Western technology, or Western trading terms, I should say, is called an inside trading day. To the Japanese, this pattern is called a harami. A harami must be followed by a confirming candle, which is a green candle with a higher high and a higher low. Traders, we are looking at our weekly chart. This is of August gold. It is in straight candlestick format. And you know, last night, as this market began to trade higher, it traded higher on rumors that the European Central Bank is probably going to add some kind of a stimulus. They came out later and said that's probably not true, and that's what caused the market to go back down off of those highs. But on a technical basis, we have this 23% retracement level from the big picture, meaning from the rally which began in 2008. And I think we can see quite clearly that we still do have some resistance in that area, roughly 1639. That seems to be our resistance area as of now. Now, traders, that doesn't seem to be the case with silver, because where gold came off of the highs, silver really didn't. We talked about really a couple of areas that we felt would offer some sort of a support or resistance area. One of the first areas that we really wanted to take a look at is this 2884 right in here. You can see that it really matches with these tops in here. We can take it back to see that it had support in this area. So good technical history behind it. We broke through that, and we broke through that pretty significantly and pretty quickly. So where is our next real resistance level? Well, if we take a look at it, it is this 61% retracement level coming off of this 76 here, which is 30.48, call it $30, $30.50. Historically, we can see that once the market came here, tried to test it, this is the second time. On the third time, once it tests it, look at the significant breakout that we had right after that. As this market came down, really not as historically relevant because the market was meandering down from this absolute high here at 37. But you can see it tested it on one occasion, second occasion, third occasion, and then the breakout to the upside. Traders, this promises to be an exciting week in the marketplace. We have good positioning from the long side. The market has been moving in our favor. We're thankful of that, and we'll maintain our long positions. For now, we'll maintain the stops that we just moved up. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.